Good morning, and you're watching Market Cafe on ET Now with me, Vinny Motiwala, along with me, Singh as well. Singh, a very good morning to you as well. And handover seems to be at least the positive side coming in from the US markets, right? So, hoping some green today on the street. What is the overall
we can hope for the best, Vinny.
What is the overall setup looking like? Hopefully, nothing in terms of a subdued move, at least for the markets.
Definitely. A very good morning to you, Vinny. And let me quickly take you through what the global markets looked like last night, and let me give you a handover of that. Now let's look at the US markets, and the S&P 500 futures traded near flat on Tuesday night as investors looked ahead to the Federal Reserve's policy decision and subsequent press conference slated for Wednesday afternoon. Now S&P 500 futures inched down marginally, while futures tied to the Dow Jones Industrial Average lost 97 points, or about 0.3% there. And aside from the Fed's policy announcement, investors are also preparing for Chair Jerome Powell's remarks to the media, where he may give insight into the state of the economy and the central bank's path forward. Markets are expecting a 95% chance that the central bank will keep rates at the current target of 5% to 5.25%, according to CME Group's Fed Watch tool. This would be a reprieve from rate hikes following a streak of 10 straight increases that we've seen so far. Now, May's Producer Price Index, an indicator of the path of inflation, is due by tonight India time. Let me also quickly take you through what the European markets did, and while I refresh my screen on that, Vinny, why don't you take us through what crude did and what commodities look like overnight?
So let's look at what has happened in terms of the crude prices. Is that what we saw overnight? 3% increase in crude prices. Now, the previous session we had seen a fall coming in. Now, this increase actually came in why? Was because China actually cut their rates. Now, because of that, what happened? We saw a cut coming in terms of the increase coming in terms of the crude prices after China actually cut its rate for the main central bank of China cut its rate. Now, what happened other than that was that when it opened this morning, we saw that oil prices actually saw a dip, and mainly the reason was because there was an unexpected increase in terms of the US crude stocks. The inventory over there has seen a sharp increase coming in, means there's more supply, but the demand could be lower, or there are some situations, and let's not forget the China economy recovering. That factor has still not come into play as well. So that is a factor that we're keeping an eye out on, which is signaling that weak demand to the markets is already worried about the recession coming in, disappointed Chinese economics data. These are the factors that are impacting the crude prices, and that was seen in the inventory, which saw an increase coming in as well. So as of now, when you look at the Brent crude oil prices this morning and where they're standing at, Brent crude oil is around the $74 per barrel mark, and WTI crude oil is just slightly below the $70 per barrel mark as well. And I just want to mark in terms of gold prices also what is happening over there. Gold is trading around the $1,958 per ounce mark as of now. A very subdued move coming in this morning, because most of the commodities also do watch out for what the Federal Reserve is going to be doing in terms of the rate decision coming in over there. And obviously the dip as US yield has ticked higher and moved higher, that is something that is keeping the gold prices subdued in trade as well, Snehi. So that's how it's looking like in terms of actually the major commodities coming in this morning when you look at crude or the gold prices as well. So Federal Reserve, that meet is surely everyone, all eyes on that. Markets keep an eye out on that.
Generally. Let me take you back through what the European stock market did then, and the day ended higher on Tuesday as investors digested strong UK labour figures and US inflation data ahead of the next meeting of the US Federal Reserve. Now, the regional stock 600 index finished around 0.6% higher, with most sectors in the green. Mining stocks shook off recent negativity to climb 2.7%, while tech stocks rose 1.5%. So big up move coming in on the European markets. But also now let's quickly take you through what cues you should be watching out for in trade today. Now, FOMC rate decision, all eyes are on that, of course. And India Wholesale Price Index, UK GDP and US PPI data will be out today, along with the IEA monthly report. Now, moving forward, on the corporate action on Dalal Street, you've got the Lloyd Streets. You've got Lloyd Streets that, will mull proposal to raise funds today. Today is the last day for TCS you should buy that stock to be eligible for dividend payout today. And for Varun Beverages, it's the last day to buy the stock today before the stock split. In terms of other events today, since today is a Wednesday, it marks a no honking day in Mumbai. The Volvo C40 Recharge EV will make its in India debut today, so watch out for that one. And Cyclone Biparjoy is expected to intensify in the next 24 hours, so also stay indoors and keep an eye on that one as well. Now, Hero MotoCorp, the Hero Extreme 160R will also debut today. So debuts on the auto street today, on the market, on the auto front, so keep an eye out for all these cues in trade today.
Yeah, absolutely interesting cues that we're watching out for this morning as well. And today, the whole day is going to be something that autos, a lot of launches coming in there as well, cues coming in from that front as well. But let's move on and actually talk about what is happening in the world of commodities. I beg your pardon, the global markets as well. Commodities is what we actually touched upon. Now, in terms of the US inflation, let's talk about that. In a major shot in the arm of the US consumer markets, the retail inflation for the month of May has come in at 4%, which is much lower and the lowest that we have seen in terms of the last 2 years for the US inflation. Now, the CPI increased just 0.1% in the month gone by, making it the smallest increase since March 2021. Now, let's go across and listen into Manish Singh, also the Chief Investment Officer at CrossFit Capital, sharing his take on the same as well.
Always been saying that inflation is not a problem. I mean, what you will really face is disinflation that's coming down the line. So this CPI report clearly has a Fed pause written all over it, given the numbers we have seen. So it's highly unlikely that they're going to increase rates when they conclude their meeting tomorrow. The focus should shift to a pivot, but the pivot likely is not going to come at this meeting, probably not even at next meeting, but that is the next thing that everyone has to focus on. Few other things to look at, because if you look at the PPI number, the PPI number in China is already pointing to disinflation. It's at minus 4.6%. So the news this morning that China is considering a stimulus didn't come as a surprise to me, because when you see this inflation number, then you have to get the inflation higher or get the price level higher, and that's what China will try to do. So the Fed will clearly be looking in terms of, first, they'll be relieved that inflation is not a problem. It hasn't been a problem for some time, but at least in the headline number, they will be relieved. But the next focus for them is to avoid US recession, because if the interest rate stays where it is now, 5.25, look at the ISM services number. ISM services number was holding up really well, but that is now down to 50.3. ISM manufacturing is already at 46, i.e. in contraction zone. So the key focus for US is going to be to avoid a recession, or if there is a recession, then keep it shallow, and that is where the Fed is going to be focused. Well, I wouldn't really see the US dollar massively impacted. I mean, we have seen the weakness that US dollar had recently after a huge amount of strength, as you saw in cyclical way. From here on, I think in terms of interest rate differential, given, and now FX, of course, we have to bear in mind, in FX, 3 months is a long term and 1 month is short term. So you have to bear that in mind compared to equity market, where it tend to be longer term.
That's the word coming in on the US CPI inflation trend. But with the key inflation figures out of the way then, investors are now eyeing Fed's rate hike decision. Policymakers are poised to pause their hiking of interest rates for the first time in 15 months while retaining a tightening bias. With inflation still too hot and flaring uncertainty around the economic outlook, a breather from those rate hikes looks to be on the cards, albeit it may be a very short-lived hiatus.
Okay, and let's keep it with those central banks, because what happened is the People Bank of China has gone ahead and surprised the street by cutting their short-term lending rate for the first time in 10 months. This with a view to restore the confidence in the equity markets and to fuel the post-pandemic recovery for the second largest economy. The cut also signals towards a possible easing of long-term lending rates, as well as amid the weakening sentiment and demand.
Tracking some more macro cues across the globe then, and New Zealand's economy may have contracted for a second consecutive quarter, putting it into recession sooner than the central bank had expected. The GDP fell 0.1% in the first quarter, and the central bank last month signaled it was done tightening after raising rates by 25 basis points to the highest in more than 14 years at 5.5%, ending its most aggressive hiking cycle since 1999.
And, talking about more macros, but on the commodities front, you have the Europe's benchmark natural gas prices, which fell for the second day in a row amid the tepid industrial demand and comfortable inventories. The price of European gas benchmark rose as much as 20%, extending a run that began last week. Remember, the benchmark has declined 90% since the peak of the energy crisis.
Shifting focus then, and Disney has announced a major rejig in its release dates, adding a new Star Wars movie and a Moana live-action adaptation to the schedule and delaying the next 3 Avatar movies by a whole year. Based on the recently rejigged timeline, the final Avatar movie is coming a whole of 22 years after the original 2009 blockbuster.
Moving on to some updates coming in from the football world. Why? Because Manchester United shares soared over 10% after reports suggested that the bid from Qatar was likely to be accepted. Now, the Qatari media reported that Sheikh Jassim, the son of country's former Prime Minister, is poised to be announced as the preferred bidder of the Premier League Football Club. His final offer was reported to have been around $6.3 billion for total control of the Manchester United club.
Alright then, and in an explosive claim against the Indian government, former Twitter CEO Jack Dorsey has said that the Modi government had threatened to shut down the social media network in the country. He added that the government made multiple requests to the social media platform during the farmers' protests around journalists who were critical of the government. Sumita Karir joins in with more details on this. Sumita?
We will shut down your offices. We will raid the homes of your employees if you do not follow suit. Well, those are the stunning claims. In fact, statements coming in from Jack Dorsey, who's the former Twitter CEO. He said that in an interview to a YouTube channel. Remember, Dorsey quit as Twitter CEO in 2021, and on a question posed by the YouTuber on his YouTube channel regarding how he navigated the policy landscape across the world, being such a powerful platform, Jack specifically said, and I quote him, "India is a country that had many requests of us around the farmers' protest, around particular journalists which were critical of the government, and it manifested in ways such as we will shut Twitter down in India, which is a very large market for us. We will raid the homes of your employees, which they did. We will shut down your offices if you do not follow suit." And this is India, a democratic country. Naturally, that has raked up a political storm. Congress and the opposition parties are attacking the government on these claims that have been made by Dorsey, but reacting sharply to Dorsey's claim and issuing a point-by-point rebuttal. MOS IT and Electronics Rajiv Chandrasekhar called Dorsey's claims an outright lie. He also said the following things. Number one, Twitter was never shut down and no one went to jail. Number two, Dorsey was a repeated violator. He also said that Twitter is a company that believed that it didn't have to comply with the Indian law. Interestingly, he also lashed out at Twitter, saying that the company during these periods was partisan in behaving in an arbitrary manner. He was, of course, referring to the time that Jack Dorsey was the CEO. And, of course, he was also referring to the leaked documents that came out post Elon Musk took over. Now, remember, Twitter, before Elon Musk took over as CEO, had several run-ins with the Indian government, especially after Twitter tagged some of the tweets as manipulated media in 2021, and more so after the IT Act was tweaked to make intermediary platforms more responsible, and it pushed them to comply with Indian laws.
Well, India is a country that had many requests of us around the farmers' protest, around particular journalists that were critical of the government, and it manifested in ways such as we will shut Twitter down in India, which is a very large market for us. We will raid the homes of your employees, which they did. We will shut down your offices if you don't follow suit. And this is India, a democratic country.
Okay, let's move on. And chai, murgi and fal, these are not just food, but Also, code words used by finfluencers. This after SEBI's crackdown on them for operating without authorization. So what are the other code words and what do they actually mean? How are the finfluencers finding loopholes to get around SEBI's structures on what can't be said? Now, let's take a look of that, and that special report is coming in from my colleague Bhavya Dua.
A regulatory crackdown on finfluencers, some of whom have operated without an authorization from the Securities and Exchange Board of India, risks eroding the earnings of this category of people who leverage on their social influence skills to attract potential investors to financial assets and products. Finfluencers have recently come under an increasing regulatory glare over practices that violate SEBI's rules. Capital market watchdog, the Securities and Exchange Board of India, recently turned on the heat on finfluencers. SEBI last month settled a matter related to violation of its rules against PR Sundar, who had to discharge fees collected from clients with interest dues. The regulator also warned PR Gunjan Verma in a matter linked to providing investment advice without an advisor registration with SEBI. That's the story so far. Now, some in the fledgling industry are becoming innovative in their modus operandi to dodge the regulatory oversight. Some finfluencers are devising code phrases to replace market jargon that is intended to communicate price-sensitive information to followers via cryptic messages that misses SEBI's radars and allows clients to boost monetary gains. Machli, murgi, chai and phal are some of the most common words used by these micro-influencers on their YouTube and Telegram channels as codes for buying and selling. A few micro-influencers with a few thousand followers have been resorting to such techniques and earning somewhere between 10 to 20,000 on Super Chat from their followers who are benefiting from the tips shared by them. Now let's look at a few examples of the phrases used by them. When they say hum chai pee rahe hain, that is we are drinking tea, they believe that the index is about to fall. That is a sign that their followers should buy a put. To indicate the strike price, they keep their trading charts open and keep the cursor at the level they believe the index will move. On the other hand, when they say hum phal kha rahe hain, that is we are having fruit, they're signaling that the index will go up. Therefore, their followers will know that they should buy a call. There's another channel that says something like machli mar gayi, the fish died. Then the followers understand that the price is about to fall. On the other hand, when they say murgi kha rahe hain, we are having chicken, then they're expecting the price to go up. Madhvi Puri Butch, chairperson of the Securities and Exchange Board of India, has hinted that discussions are on for the implementation of regulatory measures for these financial influencers. So all eyes are on the market watchdog to know what's cooking before some regulations come in to eliminate such techniques from being used by financial content creators.
Interesting details coming there. Thanks a lot, Bhavya Dua, for that report. But let's unlock a gold.
Welcome back, and you're watching Market Cafe on ET now. Let's look at what the Asian markets are also doing this morning. What we're coming in and what we're understanding as of now, Hang Seng is trading with positive gains, up almost 0.4% in trade. Let's not forget, US markets also had given a bit of a positive cue coming in. Korea's Kospi, when you look at it, that's not doing anything exciting, almost flattish in trade, just a bit of a negative bias that has come in for that, down almost 0.1% in trade. Looking at the other ones as well, what is Shanghai doing this morning as well? Shanghai is trading positively as well. ASX 200, that's also trading with gains of almost 0.3% in trade, like you can see coming in on your screens as well. Other than that, looking at overall why the Asian markets are rising ahead, also a bit of that positive bias is coming for most of them is, let's not forget the Fed meeting that is there, US inflation rate that has hit a 2-year low as well. So yes, that inflation is, seeing a bit of an easing coming in 2-year low, surely keeping the markets up on the positive side this morning. Nikkei also trading with gains of almost 1% in trade as well. So most of them are trading as of now on the positive side. Kospi is trading with a slight bit of a decline this morning, Sneha. And also, let's not forget the SGX Nifty is indicating a bit of a muted to a positive start, you could say. At 18,832 is what the SGX Nifty is at.
Absolutely, Vinny. Welcome back and thanks for staying tuned. You're watching Market Cafe here on ET Now. Now, RBI may soon tighten norms for unsecured lending by regulated entities. ET Now has learned from sources that the regulator may increase risk weightage for unsecured lendings. My colleague Ankur Mishra joins for more details. Ankur?
yes, Reserve Bank of India may announce a tightened norm for unsecured lending, and what we understand is that these announcements are likely to be made very soon, as sources have told us that there has been meetings which has been held between bankers and the regulator has already taken details of such portfolio by the banks. In fact, they had asked for monthly data of such unsecured lending and how much growth has happened in the past. Although the regulator never intervenes in the kind of growth or there is no X number which has been given by the regulator to the lenders on this much growth should happen, but all in all, the regulator wants that even with the fast pace of the growth, the balance sheet of the banks should be secured, and in some instances, especially with few banks, the regulator has found that the practices which has been taken by the banks may not be suiting to its balance sheet, and therefore a tightened norms may be announced by the regulator. The announcements could include increased risk weights for the banks for such kind of lendings. Remember, unsecured lending refers to personal loans or credit card outstandings, and if at all there is an announcement by the regulator on such norms, the impact will be on banks, NBFCs as well as the credit card companies which are giving such kind of loans.
Okay, thank you so much for that, Ankur. But let's move on and talk about, with all that hype that actually we're seeing over Tesla, much awaited India debut. ET now has learned discussions between the center and Tesla and are in top gear as well. Now, sources tell ET now that the government is still evaluating various aspects, but overall talks is on the a positive side and positive direction. My colleague Prakash is here to give us more details on this. Prakash?
So the government officials are informing that it was an excellent meeting with the Tesla officials when they were here, and discussions are moving in a positive direction. The government is evaluating on various aspects before commenting anything on record, but the sources are confirming that the Tesla has shown keen interest on India. And discussions are also going on in the finance ministry on various aspects. When it comes to provide incentives, which has been their key demand, sources are informing that it will come with various conditions. Government wants Tesla to consider India as its potential production and innovation hub. Tesla has also shown interest on the proposal of the Indian government to establish a vendor base here in India. As you are aware that Tesla has a strong vendor base, including manufacturing facilities in China at present, but it is the fact that Tesla has now recognized the potential of India, and it is exploring various opportunities to enter in the Indian market.
Now, Maruti Suzuki is set to launch its costliest vehicle ever on the 5th of July, which is Invicto. This will also be the first Toyota vehicle that will be rebadged and sold through Maruti Suzuki's outlets under the global Toyota-Suzuki Alliance. The premium multi-purpose vehicle that will sit above the Grand Vitara will be sold via Nexa outlets. ET Now's Sumit Chaturvedi spoke to Shashank Srivastav, who is the Senior Executive Officer Marketing and Sales at Maruti Suzuki India, in this exclusive conversation. Let's go across and listen in.
So we will have to wait for some time to see the booking trends and what are the trends post the price announcement before we come to a conclusion about what the stable demand would be. But really this segment overall, if you look at the 3-row SUV MPV segment, was about 258,000 last year, out of which in the premium side, which is greater than 20 lakh category, was about 110,000. So the volumes are, there are 8 players in this segment, including the Carens, the Alcazar, the Hector Plus, the Scorpio and the XUV 700 and so on. So the volumes may not be very large, but it's also a good way of participating in a segment which is rapidly growing. The greater than 10 lakh category has grown to be 5% of the industry. It was just 1% a couple of years back.
And so looking at overall market, this is going to be only automatic variant as we understand.
So the variant strategy and what all the variants will be available at what prices we'll be announcing on the 5th of July at the time of launch of the Invicto.
India is seen in a spot among global investors, and that's the word coming in from DP Singh, Deputy MD and Chief Business Officer of SBI Mutual Fund. While speaking to ET Now's Anurag Joshi, he shared that the momentum of gains in the India's equity market will sustain. Here's an excerpt of that conversation.
There are a lot of headwinds in the other developed countries. So India is being seen as a very sweet spot at this point of time because of our internal demand. That is number one, and number two, because of our geopolitical strategies which country is playing around, which gives us a lot of tailwinds actually, which we are importing oil at a very competitive price. We have a lot of our foreign exchange reserves are again touching almost $600 billion. So all these are very sound signs. Most of the countries who are affected with the conflict, their currency position or their balance sheet will not be as strong as our balance sheet is. So that gives another sense of comfort to the international investors. So I am sure that this momentum will continue.
And do you see any change in global allocations from global equity funds to India because of this particular factor?
There are two parts of it. One, the overall kitty for investment in foreign countries by those economies has shrunk what it was earlier. But at the same time, there's a great attraction for Indian market, Indian stocks, India as an economy. So naturally, even at the shrunk wallet size of the foreign investors, with the higher allocation, they are looking at India in a much better way because they feel.
Moving on then, telecom giant Vodafone Idea mulls on reviving its business plan by infusing a total equity of 14,000 crore rupees. And as per the plan submitted to the government earlier this month, ABG and Vodafone Group will soon invest 2,000 crore as fresh equity in the company. Now remember, promoters have already invested 5,000 crore rupees in the company in September 2021. Also, as part of the revival plan, the promoters will work with the company to raise another 7,000 crore rupees, either as direct equity or through convertible structures from external investors.
Okay, and let's talk about HUL, and this time it's on a different front because what is happening is that as many as 205 managers at HUL took over home more than 1 crore rupees as annual salary in 2023. That's FY23, which is up by 25% from 163 in FY22. However, just a third of the executives who drew the 8-digit salaries were under 40 in FY23, reversing the decade-old trend when half of the HUL's crore club were people under that threshold limit. While salaries at HUL are partly linked to the company's performance in sales, profitability, experts said that there is heightened competition from startups and D2C firms for talent, especially from the country's biggest consumer goods firms as well.
Alright, then with that, let's quickly slip into a short break. Don't go anywhere. We'll get you all the stocks that you should be watching out for in trade today, right on the other side.
Welcome back, and you're watching Market Cafe on ET Now. As of now, looking at the SGX Nifty, it's almost at the similar levels as we saw in the morning as well. Flattish almost is what we could say with a positive bias. 0.2% uptick is what we're seeing coming in, and the trade as of now as well. Let's see how the Indian markets open up as well. But first, since the RBI announced ECL provisioning norms, SBI chairman exclusively spoke to ET Now, and what he tells us is that there is no impact on its books as banks will be allowed to spread the provisioning over 5 years. Let's go across and listen to what they have to say.
ECL norms, which even Honorable Governor RBI has also indicated that banks will be given sufficient time. This is also a derived function of the loss-giving default and the PD. So when we look at our book, we have got a situation where our loss giving default has come down quite a lot. It is evident from the credit cost, it is evident from the PCR which we already have. And also the PDs, also we expect that the better underwriting practices which we have put in place will ensure that our probability of default should be much lower going forward. So though at a point of time when all this discussion paper was brought in, we had done an assessment, and that showed up that about 24,000 to 25,000 crore was the requirement for the ECL. But the discussion paper also mentioned that they will be giving 5 years time to the banks for absorbing this kind of a number. That's one dimension. The other dimension is that today in our book we have got provisions for other than the NPA provisions are as high as about 35,500 crore plus. So which means that 25,000 crore of the ECL is almost, it will not have any impact whatsoever on the performance of our bank or our quarterly results even. Because if at all we go by what the RBI has mentioned in terms of 5 years time, then on a quarterly basis it will come out to be about 1,250 crore. So normally last quarter we have booked a profit of 16,000 crore plus. So it is not really a significant number. We can absorb it without any impact on the balance sheet.
So that was the word coming in from Dinesh Kumar Khara, who's the chairman at SBI, exclusively to ET Now. But after Nirma cut soda ash prices, Tata Chemicals followed suit with a higher cut. Now the company has taken its biggest cut since November of 2022. My colleague Lisa joins in with more details. Lisa?
Well, yes, so yesterday we alerted on Nirma cutting its soda ash prices by around 2,000 per metric ton, and we also mentioned that this would instigate the other soda ash players like Tata Chemical as well as GHCL to follow suit, and that has indeed happened, as Tata Chemical has followed it with a higher price cut of around 2,000 per metric ton. Now the price cut stands at around 6.8% and it stands at around 31,600 per metric ton, and this is the biggest price cut taken since November 22, which saw 4% cut, and the last price cut was taken in April of around 3.4%. Now what the analysts are saying that this is leading to a pricing war between the players, and a sharp correction in soda ash prices saw a decline of around 5.8% in Q1 FY24 as well. So the margin is likely to get impacted despite the falling coal as well as energy cost, and this will flow into Q2 as well, because this is a seasonally soft quarter for soda ash players. So Q2 FY24 margin also is likely to be hit. So what the analysts are saying that this is because of the demand supply dynamics playing out, as the supply availability is too high on the back of Inner Mongolia region coming out with high capacities, and the domestic demand stands soft. So we may see a negative reaction in both Tata Chemical as well as GHCL today, because they are major soda ash players, and especially for GHCL, as most of their soda ash is in their Indian region.
Thank you so much for that. But let's move on and talk about which are the other stocks that one should keep an eye out on this morning. And Ansh is here with that whole list of stocks. Ansh, a very good morning to you. And what are the stocks that one should keep on their radar?
Hi, good morning. So Anupam Rasayan will be the first stock in focus for today's trading session, as the company has signed letter of intent worth 2,186 crore with one of the leading Japanese specialty chemical company. The period for which is 5 years. As per the order details, company will supply new age patented life science active ingredient. Zydus Life will also be in focus, as the company's injectable manufacturing facility at Zydus Biotech Park underwent US FDA inspection from June 5th to 13 June. And CMP inspection concluded with 0 observation. Well, this is a positive factor for the company. Lastly, Kotak Bank will be in focus, as Board of Directors will be meeting on 16th June to consider raising of funds. The funds will be raised by way of issuance of unsecured, redeemable, non-convertible debentures or bonds in one or more tranches or series on a private placement basis. So keep an eye on the stocks.
All right, we'll be keeping an eye out on all those stocks in trade today. But the IPO frenzy seems to have cooled off sharply from FY22, as the street turns wary of investing in loss-making startups. But there are several names that have returned more than 4 to 5 times since their issue price. Somit takes us through the list of IPO losers and winners over the past 2 years. Somit?
Well, if you see, the IPO market was very power-packed in the last 3 financial years, that is FY21, 22 and 23. Nearly more than 100 companies had come out with their IPOs, and FY22 was the year where we had seen nearly 53 companies coming out with their IPOs. But how many of them are still above their issue price? Now for FY21, if you see, nearly 7 companies of the 30 companies that came out with their IPO are still trading below their issue price. In FY22, nearly 24 companies of the 53 companies that came out with their IPO are trading below the issue price, and in FY23, if you see, nearly 11 of the 37 companies that had come out with their IPOs are still trading below their issue price. Now, if you see the top IPO losers that we are saying here, and this is compared to the current market price versus the IPO issue price that had come out with. Cartrade tops the list with nearly 67%. Now, if you see the current market price of Cartrade is nearly 67% below the issue price. Along with this, there is Aegis Transact, which is trading nearly 66% lower. Then there is Fino Payment, 60% lower. Then Paytm, which is also trading nearly 62% lower compared to its IPO issue price. Along with this, there are other companies like Surya Small Finance Bank, Aditya Birla AMC, Shriram Property, Star Health, Hiranba Industries and LN Electronics. But not all is bad for the IPO market, because there are a host of companies that are also trading 2x, 3x their IPO issue price. And to name a few, firstly we have Mazgaon Dock on that list, which is trading nearly 613% above the IPO issue price. And along with this, there is Paras Defense and Data Patterns also in the defense space, and all these companies had seen a good rise in their share prices in the last 1 year. Then there is Happiest Mind, Angel Broking, Hari Om Pipes, Venus Pipes, which are also trading considerably above the issue price that the company had come out with their IPOs back then.
Okay, Somit, thank you so much for that. Very interesting data that is coming in on that front. But with that, viewers, we're absolutely out of time on this edition of Market Cafe. And as of now, SGX Nifty surely moving towards a positive side indication coming in for us. Absolutely. So goodbye from Singh, myself, as well as the team who put the show together. Don't go anywhere. The markets is here to take the action forward.